Hello, everyone. Brother Al McClaney with this week's stewardship video. We are continuing with the book Salt Plan, which was written by Chuck Bentley. This is part 2, and I think I'll end the series next week when we talk about liquidity. We've gone down each letter of SALT, and I actually added one of self-reliance was the S, and we started and flipped it over and started with the truth. But SALT means save, asset allocation, liquidity, and T is truth. Before we get too far, as always, here's the disclaimer. No advice should be seen as a recommendation, as I am not a licensed financial advisor and is for educational purposes only. And I told you this book was written by Chuck Bentley, who's the CEO of Crown, and was written in 2011, but is still very relevant today. And the book says how to prepare for an economic crisis of biblical proportions. And if you've been watching the news, you've seen there have been two main concerns. Well, really three. First, you can see the stock market is having, is not responding very well. I think that's the good word to use. We're actually moving toward, if not in a bear market, which is a 20% drop over a couple of months. We talked about that in the last couple of videos. We're concerned about the interest rates being increased. The FOMC, which is the Fed's committee, met this week, and they actually did a 50 basis point or a 0.5% increase in the interest rate, which if you take it an illustration specifically how that impacts the interest rates that started the year on a 30-year, started this year on a 30-year mortgage was about 2%. They're now up to 5%. That's a 3.5% increase in less than a year. In fact, that's just been 4 months. We're in the month of May, 4 to 5 months. We've gone up 3.5% interest rates. That should also be impacting if you're carrying credit card debt. You'll see those start to increase. So anything that's adjustable rate when it comes to more to interest rate is going to go up. If you've got a fixed rate mortgage, it's not going to affect it. But if you're buying a house right now, you're going to be buying it at the more increased interest rate. The other thing that you've been hearing about is inflation. And I don't need to give you examples of that. You can see it in the gas prices. You can see it in food prices. They were also talking about bread prices are going to soar. That's inflation, but also related to Ukraine, because most of the wheat production in the world comes from Ukraine. So all of these things are heading toward possibly a recession. Why is the Fed raising interest rates, you may ask? Because if you're heading and you've got runaway inflation, two of the mandates of the Fed by law is price stability and employment. The employment numbers are still good. They gave a jobs report on Friday where we're still looking good from an employment standpoint. A lot of job openings, but that also has a double-edged sword. A lot of job openings, that's good for people looking for work, but for businesses, they're having to pay more. And so what are they doing? They're passing on those costs to the consumer. So that's creating inflation. So inflation gets too rampant and runaway, it overheats the economy. So what's one of the main tools that the Fed uses? They raise interest rates. They're not, they're trying to pause and slow down the economy. But if you look at it, it's like they're stomping on the brake. And here's an interesting quote that why there's concern when they start doing this. CNBC quote said, the Fed has not been successful in reining in inflation since 1965 without causing a recession. A recession means there'll start being job cuts. That's the main impact that a recession has. It means the economy starts to slow down and actually could start, instead of positive growth in the economy, it starts decreasing, negative growth, which is the result why you see unemployment start rising and you see people being laid off. So a soft landing is no recession. So the chances are of a soft landing are pretty low when it comes to probability. As the quote said, since 1965, they hadn't been able to pull this off. So let's go into these, which could be helping us prepare, because we're not going to fear, we're going to be prepared. We're going to be prepared. So let's look at some of the things that's covered in books. And I encourage you to get this book. It's about $9 from Amazon, and you can also get it from Kindle. So we started with the truth. So I flipped it upside down and said, we always start with the truth, and the truth is God's word. We talked about Proverbs 22:3 in the Message Bible, how a prudent person sees trouble coming, ducks, and a simpleton moves forward in his club. That's what I'm saying. We're not going to be fearful. We're going to use it to be concerned and put in the plan using God's word. Proverbs 21:20, the Living Bible says, the wise man saves for the future, but the foolish man spends whatever he gets. Proverbs 22:7, the rich rule over the poor and borrow servant to the lender, and Ecclesiastes 11:1 and 2. And we're going to use those. We're going to start off with 21:20 and Ecclesiastes 1 and 2, which is highlighting the S and the A, which is saving and asset allocation. So saving and asset allocation, I'm gonna take those first two. So 21:20, the wise man saves for the future, but the foolish man spends whatever he gets. So if you're not saving, if you're spending everything, you're violating a biblical principle. You're violating biblical truth. And when that happens, there's a consequence. So God gives us his word to help us in situations. And we've talked about throughout the Bible, there's over 2,000 scriptures dealing with money, possessions, and prosperity. So if there are over 2,000 scriptures, it would be common sense to think that God knew that this money thing, this finances thing was going to be a challenge to us. So he gave us his word and principles to follow. Ecclesiastes 1 and 2 talks about send your grain across the seas, and in time, profits will flow back to you. But here's this. This is diversification. I know if you knew that diversification is in the Bible when it comes to investing, but divide your investments among many places, for you do not know what risks might lie ahead. So here's a principle of saving. And saving we look at is like a savings account, something that's stable. You're not putting it in there for purposes of growth, but something that's stable. Certificates of deposit, money markets, those type of things we're looking at with the savings. But out of the savings, a portion of it you will be investing. And that's what Ecclesiastes 1 and 2 is talking about, investing and using the principle of diversification. So I've shown you this slide before where it talks about annualized returns during the last two rate hike periods. And those rate hike periods we're talking about are interest rates. So you can see there was one that stood out where on average REITs, which is real estate investment trusts, have gone up 16.4% on average, or have yielded a rate of 16.4% on average when rate hikes occur. You see these on this chart are only the ones that had positive annual returns. Nothing negative is on here. So you may be asking, well, where's small cap, funds? Well, they didn't do well, so they didn't make this chart. So large cap stocks, which are your big IBMs, your Microsofts, but careful on Amazon. And here's a good example, because this is not always infallible. So just this week, Amazon rocked the market. It has gone down 30% year to date. So this is just a guideline, something designed to get you to research and look into different things. So let's look at these REITs. And I saw an article in this distribution I take every week called readynews.com. And it says, buy these two REITs for rising rates and possible recession. Once again, this is not a recommendation. This is designed so you can just brainstorm and see, is this something you may be looking at interested in? So do your own research. If you have a financial advisor, ask them about it. So two of them out here was Blackstone Mortgage Trust, and then these are the symbols, BXMT, and then Starwood Property Trust, STWD. And you may look at something, real estate investment trust often have properties. They may have in their portfolio commercial properties. You may try to find an exchange traded fund that may has warehouse properties in it. Because as I drive around today, I was out in Dallas-Fort Worth area, how many warehouses are being built? Well, somewhere those are in a loan portfolio probably. So maybe this is something you'd be interested in. So take a picture of this. You can always stop it, read the full article, and do some research. Here's some other possible, not recommendations, but things just to spark your research, you know, DNA within you to look at these. And I love US News and World Report, and they send these out weekly, and you can subscribe to them. And there were two that hit uh, recently. There was one talking about 7 stocks that soar in a recession, and we've looked into these before. Usually they're related to consumer spending, oftentimes consumer, not discretionary, but consumer staples, things that people still have to have during recession, during inflation. So things like Target and Walmart sell things, toilet paper, food, all those type of things. People still need to have electricity. So here's Nextra Energy. So just take a look at these and see if this is something you may want in your portfolio. And then here's another idea in the exchange traded funds that says, hey, buy these as interest rates rise. Again, not a recommendation, just designed for you for educational purposes, for you to do your own research. And one in particular I saw in here. So once again, you see, here's the theme. There's energy, XLE. You also see a lot of treasuries and things related to commodities in here. But here's one that we haven't talked a lot about. There are actually exchange traded funds that are designed when the market's going down, they go up. And here's one called SQQQ Ultra Pro Short. And short means that you are hoping the market goes down. When someone short the market, you'll hear them say they shorted the market, means that they put on a particular type of investment or trade to where it should be profitable when the market's going up. If someone says they're long the market, that means that they're hoping the market is going up. Right. So and that's what most people are. Typically, everyone knows how to go long, which means you buy a stock for $5, it goes to 10. That means you're long. You're hoping it went up. Not a lot of people know how to, what they call short the market, which means they're hoping the market goes down. So that SQQQ, I put it up here as a chart, as a comparison. So these green and red lines, that's the Standard & Poor price action. So in that magenta, or purple, but it's magenta, that's that SQQQ exchange traded fund. And notice as the S&P goes up, it's going down because it's an inverse exchange traded fund. So when it goes down, meaning the S&P is going down, notice how that magenta line starts to go up. Notice how, again, we had this rally, and we talked about this. We're in a bear market, or close to a bear market, people are calling it, but we're definitely in a downtrend. So as the market has been going down, this particular investment goes up. So that may be something you look at. You may not want your whole portfolio in there, but maybe a portion of it, just to kind of play the market in a way that it's short, that normally most people are not going to be able to do or understand how to do. I've really gotten into this heat map, and I hope you're going out to look at this. And this illustrates, I think, in a picture type way, a observable visual way, how this is just a one-day performance. And this was Friday when we had all that sell-off. Notice the only green areas, here's that inverse, and there's that SQQQ. In one day, it went up 3.88%. But notice all this red, close to red, out there by all these different exchange funds. The only areas that you see a lot of green were in areas like crude oil, which is a commodity. You see over here, technology got rocked, which is XLK. But XOP and XLE, which are in the oil area, and these areas up here were the inverse funds that's short. So go out, look at that finviz.com. I've got this on exchange traded fund. We've shown you how to do it with the S&P 500. You can do it for the world, and look at that. So use this as one of your tools. You can say this is just a one-day look, but you can do it for 1 month, year to date, and just use it as an engagement tool. We always like to look at what's going to affect possibly the market through earnings. Last week, that was a textbook illustration. You saw how Amazon affected the market. It was down. Microsoft, Apple pulled the whole market down, right? Because those are some behemoth industries and companies. This week, probably not as much, but it'll be interesting to watch like Walt Disney and Six Flags. Are people returning back to the parks? Coinbase. Um, if you're in Bitcoin, Bitcoin got rocked last week. So it'll be interesting to see what Coinbase, the exchange for them, what it's going to be reporting. We'll also get to look at AMC. Are people returning back to the movies? Right? Roblox has been out there for a while as something that could be an interesting long-term play. Rocket Mortgage. Are we going to see the interest rates affecting? So it'll be interesting to see. I don't know if it's going to move it as much as last week, but there's some interesting companies reporting next week. As we always do, we end with the two broader markets. Here's QQQ related to technology. And I drew one additional line. The other lines were already here. These two here, I mean, and it's just amazing how the QQQ respects these levels. So here that turned into resistance, and it couldn't bounce through. In fact, it bounced off of, went down. That's a new line I just drew. So we'll see, does it respect that? If not, it could go all the way down some more. And I do believe, and most of the pundits are saying, but no one knows, something lower, but it looks like the selling's probably not over. And here's S&P 500. I did not withdraw any of these lines, and this is a year to date. And in that, wow, how it respected and stopped at that support line, and how this has become resistance here. Trying to get through that will take a lot of energy. But here's the other thing that is illustrating, even in a downtrend, you're going to have these rips, to the top. So this is just basically 1 week, and see how we had these huge downtrend. Then we had this sale, and then we ended the week with selling. I mean, a huge rip to the bottom with a lot of selling, and then a rip, to the top. And then all of a sudden we end the last couple of days with all this selling. That's called volatility. I mean, whether it's going to the top or to the bottom, when you have those huge moves like that in 1 week, because in the end, it was almost like we ended kind of how we started the week, because I think that's the beginning of the week. And look how we had all this, buy, then we ended with all this selling. And in the end, we're about where we were at the beginning of the week. Right? That's volatility sometimes. So with that, I'm going to end. Can't wait to see what's going on for the next second week of May, but we're moving along this year. But remember, all the news is talking and is pushing fear. We're going to talk about next week how Warren Buffett is handling that. He's actually out there buying, and we're going to talk about that's another strategy that you can do. So as always, my Pastor Davis, who's celebrating his pastoral anniversary this month, we hung out, Pastor Denny Dwight Davis, and he has been a joy in my life and my wife's Janine on our spiritual growth. We thank so much for his leadership, and he is a blessing to the community of God and the leadership of St. John Baptist Church. As he always says, have a good week. Remember to keep a good spirit. And as we always say on the stewardship video, remember, Jesus is Lord. God is sovereign, therefore he is the owner, but we have an important role to play, which is his faithful stewards, which means we follow the principles found in his word and through prayer on the resources that he provides us, because he's in charge. We're his managers. So until next week, you all have a great rest of the week.